I'm Donna Rayburn. I am a certified business intermediary, business broker, and I am a CPA in the Tampa Bay area. I've been practicing for many years in this area, helping sellers get their business ready to put on the market, and I've helped buyers understand the financials of the prospective company that they're looking to buy. So now I can do the whole transaction from start to finish. So I can get the business ready to sell. We can sell it. I can find buyers for the business. So that is what I love to do, and that's what I've been doing for the last several years.
Hi, I'm Ann Griffith, a business broker with the Exit Strategy Company. With a background in finance and sales, I help business owners sell their companies the right way, confidentially for top value and with the right buyer. From start to finish, I make the process simple so you can focus on your next chapter. So the first topic we're going to be talking about is about the SBA. So can you just kind of break down what is the SBA, why would someone use it, and just things to consider when thinking about going that route?
Yes. Yes. So the SBA is a lending source. They offer more favorable terms to help buyers get into businesses than conventional banks. But most conventional banks offer SBA products, but it really is a federal incentive program. So the SBA, they allow buyers to put 10% down towards a business purchase, while conventional banks require 20% down. So that helps. And then also part of the SBA program is that they allow borrowers to amortize their loan over a 10-year period versus a 5-year period that conventional business loans require. And so that kind of lets the payment go a little bit longer. So your monthly payments are a little bit less over a longer period of time. So SBA banks and all banks in general look back at least 3 years at a company's performance. So sellers want to show that they're making money, paying taxes for the last 3 years before they decide to market their business.
Great. So it sounds like they are a resource and tool for buyers to have more favorable terms than necessarily a conventional loan.
Yes. Yes. It takes a little bit longer because you are working with a government program. So there is quite a bit of paperwork. You're signing like 50 pages of documents at closing, and it takes at least 60 days to close. So it takes a little bit longer than a conventional loan. But for some buyers, the benefits are worth some of the cost to do it.
Awesome. Thank you for explaining that. So now let's talk about SDE. Because that's a term that's thrown out there a lot and used in just calculating for business owners and sellers. So can you give a refresh on what that is, as well as any examples of Addbacks and how one would document and support those Addbacks?
Yeah. So SDE means seller discretionary earnings. And I have to explain this to every single seller and every single buyer that I work with. So it is really important that both sides really understand what this means. So SDE is the amount of cash that's left over that a buyer can decide how to use those funds. They're discretionary to the seller. So we calculate the SDE by taking the net income of the business from their income statement, P&L statement, and then we add back any personal expenses that the seller has run through the P&L. So the personal expenses are called Addbacks. So all Addbacks really need to be supported or be able to be proved to a lender. So if you're going to say that it's an Addback, you better be prepared to be able to justify it to a lender. So good examples are owner salary. So whatever the seller decided to pay themselves is discretionary because a buyer may not want to pay themselves that much. Meals and entertainment is super common. Most small business owners do run personal expenses through their company's meals and entertainment. And then auto expenses. A lot of small business owners run their autos, their vehicles through the business. So those would be examples of common Addbacks. There's several others. I personally don't like to show a lot of addbacks when I'm trying to market a business because I don't want a buyer seeing a seller use his business as a bank. I don't think that looks well for the commitment to running the business. So I prefer not to have a whole lot of ad backs. And then you have to justify all of them to the lender anyway. So I prefer, to have maybe 5 or 6 at the most ad backs. Some lenders don't take like auto expense. They don't take auto expenses as an ad back because they're like, well, that seller was doing it. The buyer's just going to do the same thing, so we don't even accept it as an ad back. Like you're trying to show that the business has more money in there that can be used to pay a loan, to pay the buyer. So you want to add back to show that there's a lot of money left over, but some banks won't even allow for them. So the lower your SDE or net income, yeah, that affects your sales price for sure if they don't accept it.
Yeah.
Yeah.
So that sounds like some lenders have different criteria on what they'll accept and not accept.
Yes. Yes. That's why it's really good for brokers to have relationships with different lenders because they know kind of how to work with them.
Yep. And some seem to be more on the conservative end and some are more open to more situations. So
Creativity. Yes.